Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor and we're going to take a look at a bunch of charts here. But first, if you're not already a member, go ahead and visit the home page of the website and you can get to know us a little bit better. The best part is the membership is free for 7 days and you can take a look and see if it's a right fit for you and join us in the professional chat room. We've got text message alerts for those of you who have part-time or full-time jobs outside of the market, daily member videos, and much more. Alright, so let's get going with these charts here. The first one that we're going to take a look at is Apple. And Apple, I'm just going to kind of give a overview of this chart. We've got this downtrend line that we were rejected at many times here. Broke over it right here in July, came back down, retested that level as well as the 200-day moving average and bounced nicely from there. Right here we have a bull flag that's been forming, and the way that I have it drawn, we just broke over it today. So today we closed over this flag right here, so more than likely Apple is going to continue higher here in the near term. The next chart that I want to look at is Netflix, and Netflix, very bullish chart here as well. Similar look to Apple in that we had a downtrend line here that began in 2015. There's a touch, there's a touch, and we finally broke over it right here. You can see that we came back down, retested it, and now we have a newer uptrend line. A few touches right here, a few touches right here, and then we have this nice support right here at about $100. You can see that it was resistance right here, right there, right here, and then we just broke over it recently with some nice heavier volume above the average volume. Okay, nice action here. So if we get a retest down to $100, that's going to be a gift. And I think that's a good long entry right there. We're over the 200-day moving average as well. Netflix, definitely a bullish chart, and I think it heads higher in the near term. Next, let's take a look at BIDU. Now BIDU, I want to show you something here. We're right at this downtrend line that we broke over. Here's a touch, there's a touch, there's a touch, and then we finally broke over it right here, and look at where we're retesting right here. Okay, so we're over the 200-day moving average. We also have this uptrend line right here that began from these lows last September. Here's a touch, here's several touches right here. So this area right here between where we are and about 170 is going to be a great bounce zone here for BIDU, so you can look for that. Next, I want to take a look at Twitter. And Twitter, just want to point something out. We came up to, this was our initial target right here at 2450, and look at exactly where we got rejected and we fell back down. It's exactly where it happened. I did not move this line. I've had this drawn. If you've been following along on these videos I've done on Twitter, you'd see that I've had this line drawn. So I'm not trying to hindsight trade or brag or anything like that. I'm just trying to show you that these levels do work, and hopefully you can learn from it on your own. And the reason that was a level right here is because of these lows right here and right there as well. So that was definitely a level right there, and that's exactly why we took profits on our longs just before that level right here. We didn't quite get all of the move right there, but that's okay. You don't have to get exactly the top or the bottom to make money in this market. So that was a nice trade for myself and our members as well. So, but moving forward now with Twitter, what's going to happen? What are we looking for? And a couple of things that I'm personally looking for. One thing you want to look here for is the Fibonacci retracement level. So if you draw it from the low over here to the high over here, and that's this line right there, that's the Fibonacci, you get the 61.8% Fibonacci retracement level right here at about $18. Okay, you can see it right here, 61.8% Fibonacci retracement level from these lows to these highs right there, and that's a perfect bounce zone because it lines up perfectly. This was the breakout zone, really, about $18. It's not a perfect resistance level, and I'll go ahead and I'll draw it. It's not a perfect level because you can see that we kind of breached it a little bit and broke back down below it a little bit, but nonetheless, it's definitely a general area here that I do think will get a bounce. You can see that we have not only the Fibonacci retracement as well as the support level, but also the 200-day moving average is just below that as well. So several reasons to think that Twitter gets a bounce here. And keep in mind, we have a big gap up here that may want to fill. So just be aware of that. Playing the chart here, no news involved in my decision making at all. I worked out before, and hopefully it'll work out again. Thank you for watching the video, guys. Appreciate it as always. If you like these free videos that we do for you every day, it's nothing compared to the membership, and the best part is it's free for 7 days. So go ahead and stop by the homepage and start your free trial today. We'd love to have you.